So your mortgage renewal is coming up, and you're not working. That can feel, well, pretty overwhelming, especially if your credit's taken a bit of a hit. But look, you are definitely not alone in this, and there is absolutely a path forward. In this explainer, we're going to walk through a really clear step-by-step plan to help you get back in control. Okay, the most important thing to get into your head right now is this. A mortgage renewal is not a cliff you're about to fall off of. You have options, and today we're going to walk through exactly what those are. This isn't about panicking, it's about planning. I know exactly what you're thinking. Yeah, that's easy for you to say, but my situation is different. I'm not working, my credit score has dropped, I'm terrified the bank is just going to slam the door in my face. That is the core fear, and we are going to tackle it head on. Listen, thousands and thousands of Canadians are in this exact same boat every single year. The key really is to stop that cycle of worrying and just start organizing. This whole explainer is designed to give you that clear, actionable plan to protect your home. So our journey starts with a really simple but totally non-negotiable first step. We have to get absolute clarity on your situation right now. Before you make a single phone call or fill out a single form, you need the facts. So I want you to grab your latest mortgage statement or just call your lender and confirm these 5 things, like today. You need your exact maturity date. You need your current lender's name, the precise mortgage balance, your current interest rate and payment, and this one's a big one, your mortgage type. Is it insured or conventional? That really affects your options. These aren't just details, okay? This is the foundation for your entire strategy. Now, here's a piece of information that might just let you breathe a huge sigh of relief. If you stick with your current lender, a renewal is usually not treated like a brand new, from-scratch application. In a lot of cases, they won't even make you go through the whole income requalification dance. Okay, so does that mean you're in the clear automatically? Well, not necessarily. A lender is always looking at risk. If your payments have been late or something has dramatically changed in your finances, they might still get a little nervous. And that brings us right to the heart of this, your action plan. This is a manageable, time-based strategy designed to put you back in the driver's seat. So let's break down exactly what you need to do over the next 90 days. We're going to tackle this in 3 simple phases. The first 15 days, that's all about stabilizing and preparing. Just stopping any frantic moves and gathering your facts. The next phase is about documenting your reality, building the case for why you're a good bet. And then finally, with that clear picture in hand, we'll explore all the different paths you can take. This whole structure is designed to give you back a sense of control. All right, in this first 2-week stretch, your job is actually to do less. Seriously, pause everything. Do not start firing off random online applications. Every one of those credit checks can chip away at your score. Instead, just focus on organizing the 5 facts we just talked about and maybe think about getting some professional guidance. Okay, next up, you're going to become a document collector. You'll gather everything that tells your financial story. An estimate of what your property is worth, your mortgage payment history, any proof of benefits like EI, your bank statements, and of course, a fresh copy of your credit report. This paperwork proves you are so much more than just your current job status. And here's a really crucial insight. Your current lender, especially, will often care way more about your consistent, on-time mortgage payment history than they will about a recent dip in your credit score. That history, that is powerful proof that you are a responsible homeowner. Okay, with all your facts and your documents lined up, it's time to map out your potential outcomes. And I want you to think of these not as things that happen to you, but as strategic paths that you can choose. Let's lay out your 4 main paths here. Path number 1, and usually the best place to start, is an internal renewal. You just stay put. It's the simplest, but the trade-off is you might get a slightly higher interest rate than what they're advertising to new customers. Path 2 is an alternative lender. These guys focus more on your home's equity, not so much your income. It's a great way to buy yourself a year or 2 to get back on your feet, but yeah, the costs are higher. Path 3, a private mortgage. This is a very short-term, expensive option. It's really a last resort bridge to avoid something like a foreclosure. And finally, path 4, a planned exit strategy. This is you choosing to sell the property to protect your financial health. It is so important to reframe how you think about this. Choosing an alternative or a private lender is not a failure, not at all. Think of it as a strategic bridge. It's a tool that gets you from a tough spot today to a much more stable future, where you can then refinance on way better terms. And, the same thing goes for an exit strategy.
This isn't about giving up or being defeated. It's about taking control, selling your property on your terms with dignity, and protecting that hard-earned equity you've built instead of watching it disappear.
Now that we know the paths you can take, let's switch gears and talk about what you absolutely must avoid. Honestly, avoiding these critical mistakes is just as important as taking all the right steps. First and foremost, do not ignore any mail or emails from your lender. Sticking your head in the sand is dangerous. Opening that envelope and engaging with them, that's your first line of defense. Next, if you've missed a payment or you think you're about to miss one, don't hide it. Being proactive and calling them is always, always better than them finding out on their own. Transparency builds trust, even when the news is bad. And this is the absolute biggest mistake of all. If you do nothing and your mortgage term just ends, your lender could force you into a crazy high-interest open mortgage, or, even worse, demand you repay the whole thing. You have to have a plan in place before that maturity date hits. It all comes down to one simple, powerful truth. Hope is not a strategy. Just crossing your fingers and hoping for the best is the fastest way to lose control of this entire situation. So, after all this, what's the single most powerful tool you have at your disposal? I'm willing to bet it's not what you think it is. Take a look at these two people. They're in the exact same boat, right? Poor credit, no income. But there's one single difference. Borrower A has 90 days left until their renewal. Borrower B only has 7 days. Who has more options? It's not even close. Borrower A has choices. Borrower B has a full-blown crisis. This proves without a doubt that your greatest asset right now isn't your income or your credit score. It's time. So I want to leave you with this one final thought to mull over. Is what you're facing right now truly a personal failure, or is it just a planning problem? Because by taking action early, by using the time you have, you transform it from the first one into the second. And a planning problem, that's something you can absolutely solve.
If this video helped you, thumbs up like, envelope with arrow share with someone who needs it. Bell subscribe to radioaria.com for practical financial education. And remember, your situation can change, but your home deserves protection.